It can be challenging, overwhelming, and inconsistent to understand banking terms and conditions. Here are a few insider tips that most banks won't tell you. In 2019, there were 124.2 million households in the U.S., and 72.5% of those households had a bank credit card or personal loan. Understanding how banks operate is crucial since they play such a significant role in our lives and help us make better financial decisions. Unfortunately, there are some things that banks want you to be unaware of, such as how using a low-interest savings account or paying hidden fees may make it more difficult for your money to grow. Here are a few more things your bank undoubtedly wants to keep a secret. 1. Credit unions may offer better rates on loans. As nonprofit organizations, credit unions typically have reduced overhead expenses. Because of this, they're able to pass along the savings in the form of lower interest rates on loans, mortgages, and even credit cards. Although it's always a good idea to examine different lenders when applying for a loan or mortgage, credit unions might also have lower account fees. 2. Depositing a bounced check can cost you money. You can experience a lot of headaches and unforeseen costs if you deposit a check that is returned for insufficient cash. If you used any of the deposit that was returned, you'll likely be required to pay it back along with overdraft fees if your account goes into an overdraft. There are ways to avoid paying overdraft fees, but some banks may also charge you a return check fee if you deposit a bad check. 3. You don't have to opt in to overdraft protection. With overdraft protection, even if there isn't enough money in your account, your transactions will still be processed. However, there are frequently substantial fees associated with the service, up to $35 each instance. Additionally, you can incur repeated overdraft fees each day. Set up text or email bank alerts to let you know if you're on the verge of going overboard. 4. Deposits aren't always available right away. How long it takes to deposit a check varies depending on the bank or credit union. Banks are required by federal law to release funds in a reasonable length of time. For deposits above $5,000 or those made at a third-party bank or ATM, this could take up to 2 days or even longer. Deposits done using mobile apps rather than at an ATM or nearby branch could also be subject to a different timeline from that of the bank. Check your bank's policies so you don't unintentionally bounce a check or incur overdraft fees. 5. Savings account rates can change overnight. An institution's savings account annual percentage yield, APY, is flexible and subject to alter at any time, even overnight. Rates on savings accounts are determined by the federal funds rate, which is the amount that banks overnight lend or borrow from one another to satisfy Federal Reserve requirements. These rates frequently change according to how the economy is expanding or collapsing. Look around for high-yield savings accounts, which are typically offered by online banks, if you want to get the greatest income on your short-term investments. 6. Paying off a loan early may cost you more. You could believe it's a good idea to pay off your loan when you have some extra money as you learn how to handle your finances. While paying off a credit card early may help your credit, doing so may result in your lender charging you an early payback fee if you do so with an auto loan or personal loan. Your history of timely payments will also be shortened if you pay off a loan early. You might be losing out on a significant chance to raise your credit score because your payment history accounts for 35% of your FICO score. 7. There's no such thing as a free checking account. You might find some no-cost or free solutions when you seek for the finest checking account. While some of those can seem tempting, others, like ATM use, check printing, and overdraft protection, could have high account minimums and unstated fees. Fortunately, when you open an account, banks are required to disclose any fees or charges. As a result, make sure you understand all the requirements and are aware of any potential expenses. 8. Banks can pay themselves back. By using funds from a checking or savings account to settle another obligation you have with the same bank, banks are permitted to do so in accordance with the right of offset law. For instance, if you had a checking account with the same bank and you missed a payment on a vehicle loan, they may be able to take money out of your checking account to bring you current on the loan. The agreement you sign when you open the account typically contains right of offset language. However, the exact wording may differ from bank to bank. 9. Banks must notify you before they raise your interest rate. When a late payment for a separate loan or account was reported to the credit agencies, credit card companies used to be permitted to raise interest rates on outstanding balances. Due to the 2009 Card Act, credit card firms were only permitted to increase interest rates when an introductory period ended, if they were tied to another rate, or if a payment was more than 60 days overdue. In all other circumstances, credit card firms are required to provide clients at least 45 days' notice before raising interest rates or making other changes. 10. Small business loans can be hard to get. When evaluating loan applications for small businesses, banks consider a number of variables. While there are many lending choices available, it can be challenging to have a business loan accepted. Your personal credit score, the length of time you've been in business, and your financial statements or tax returns can all have an impact on whether or not your loan application is approved. Depending on the type of finance you apply for, your chances can rise. 11. Online banks are a better choice for high-yield savings accounts. You might believe that maintaining all of your accounts with the same bank will save you time and effort when you search for the greatest savings account. When comparing rates before opening a new account, keep in mind that online banks frequently offer greater APYs than conventional brick-and-mortar banks. 12. You should read the fine print. When applying for a new checking account or loan, many people skip straight over the terms and conditions. However, you should always read and comprehend the small print. Since disclosure statements are regarded as legal papers, it is crucial to understand what you are agreeing to when you sign up. Read the terms and conditions thoroughly, and if something doesn't make sense, don't be afraid to ask for clarification. Not understanding how your bank accounts work may be costing you in terms of fees and lost interest earnings over the course of your life. Do your research, make sure you understand all of the account details, and ask questions so you know the facts going in. That's all, guys. I hope you enjoyed watching this video. Remember to subscribe and give a thumbs up to this video. Thank you for your time.